I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market continued its strong rebound, now having the best start for a year since 1987. That comes after a very weak fourth quarter last year and a nearly record December to the downside, the worst since 1931, and now investors seeing bargains and stepping in. The nature of this advance brings memories of the past, steady rise, hardly any downticks on very low volatility. And investors are clearly ignoring any negatives that come out and buying aggressively when they hear something on the positive side. The hopes are abound for a deal that comes between the U.S. and China as trade talks progress. And we got some false reports that Mnuchin had said that they were going to be rolling back tariffs. That sent stocks on Thursday up very strongly as the shorts scrambled and algos just came in and started to buy it all. Then we got some denial and that started to pull back, but more hope came in also on Friday. It seems ridiculous to me when you look at POTUS's stance on the shutdown. He seems in no mood at all to give ground in any way. We have news out now that his ex-attorney, Michael Cohen, said that he was told and paid to do poll rigging, and there's a story out that the president asked him to lie to Congress. All of that bringing, of course, screams of impeachment from the left. And the president seems just more and more deeply entrenched on all issues. China better come up with a deal that is fantastic, something that's really juicy, in order for a deal to actually happen. And then today a report came out that during the negotiations here on Friday that China had offered, or at least mulled the idea of spending another $1 trillion on U.S. goods over the next 6 years and then bringing that trade deficit down to zero. Well, when the stock market got wind of that, it moved up very, very sharply again. So all of this news of the potential solving of the problem of trade with China is lifting stocks. The stock market rally certainly is giving problems for the short traders because they're scratching their heads and, of course, writing emails to me. And they're not only scratching, but they're dipping into their wallets as they have to come up with more money to support short positions. So the market has now achieved a 50% rebound off of those lows, and it does look very strong. But history shows that after a 20% fall off of a major peak, there's still a lot of risk, and this type of a bounce is not unusual. In fact, we did a big picture analysis on the stock market this week, an update to that for our level 2, 3, and 4 members. I'll talk about how you can become a member in a second. And it shows that this is actually not unusual at all. And if you watch that, you will see that we lay it out clearly. It will show you that this rally is not to be trusted for the stock market right now, and that it is likely that we're going to see these buyers in stocks right now be pretty nervous pretty soon that they're entering too soon into long positions, changing their allocations because they're afraid to miss the market, and I think they're going to be not pleased with their timing overall. We think that this is just a bounce in a bear market. And you'll learn more about that and why as I give you a very, very strong reasons looking at it technically if you watch that video. Let's take a look at the 60-minute chart of the S&P 500, where we see the trading that occurred overnight and during the day. And you notice that trend? Wow. Look at how that trend continued to widen on the upside throughout the week. Here on Monday, late Sunday, China trade data came very weak. And the markets, as you could see, gapped down and sold off. But then news came out that the president was optimistic about a China trade deal, and the rally started. And you can see that every single day we got a rally. 1, 2, 3, 4, 5 days. This has been a week that continued to move on the upside. Weaker growth out of Germany brought a little bit up right over here. And then Netflix raised their prices, and the stock started to rally, fighting against what were weak bank earnings. You got this rally going, and then the USTR came out and said that there was very little progress between the U.S. and China, and it started to get a dip, but it didn't matter. Buyers kept coming in. Here's where the Brexit vote fails. Everybody knew that was coming. You got a little bit of a dip in there. It knocked down the British pound, but then the British pound came roaring back, and that's one of our best trades for the year. We think that the British pound will do very well, and then it reversed and continued to move to the upside. Strong bank earnings lifted stocks here on Wednesday, and then Prime Minister May in the UK survived a no confidence vote, but you can see another update right there, and then the advances started to expand. Morgan Stanley missed on earnings. It was one of the few bank earnings that didn't look very good. Philly Fed showed strong manufacturing data still, and the market was moving up here on Thursday, and here's that news, that report that turned out to be denied. Here's the report, here's the denial, and you can see that big tail that Mnuchin said that U.S. was prepared to just lift the China tariffs, and the shorts absolutely scrambled. Here was Netflix coming out with earnings and weaker guidance, and that was down, but it did not bother the market at all as buyers kept coming in. I think there must have been a leak in here about this news that was going to come out, that there was a report that China was offering a 6-year deal to boost the amount of buying and get the trade balance to zero. Well, later on, I read that the United States had responded that, well, maybe that's not enough. We want it to happen in 2 years. So you're starting to get some pushback already, and you can see the market moved way up here. The S&P is getting over the 2675 level. While we thought the market was going to rally in January and February, we thought the potential was to around 2630. So this has done better than we expected that it was going to do. So you get a look at the market as it has continued to achieve higher highs this week, as the buyers are nervous that they're going to miss something. And we actually think that that could be a mistake for them, because buying here, we think, is just a lot of risk. Stock market for the week gains about 3% on all of the major indexes. The bond market down about 1 1/3 points. 10-year yields jumped pretty strongly, about 9 basis points to the upside. The dollar moves up about 0.6%, a good gain as the that is a surprise to us. We thought that it would have one more dip coming and then get into a little bit of a stronger period, but intermediate patterns do look like we're going to get a little bit of further strength in coming weeks for the dollar. Gold moves opposite, of course, down about $6 on the week, and we expected that to happen. And the oil market, well, it moved strongly to the upside on Friday, giving it a pretty good gain on the week of about $1.80. So hopes there that OPEC is going to be able to do something about the supply-demand situation, but the reports are out there. The U.S. has huge capacity to drill and to produce oil, and that's going to continue to weigh on prices, despite the fact that we got a bounce going on right now. That's it for the opening. We're going to be right back and show you our best and worst for the weeks right after this very brief message. Whether you're new to trading or you're a seasoned veteran, our video library can be a huge boost to your knowledge. I want to share with you our 8 different categories of videos in our Level 2 membership and tell you about this just great offer. Our library contains all of these categories of videos, nearly 400 videos, and we do 3 new ones each week. Future Speak, which we do on Wednesdays. This gives you our analysis of 24 futures contracts. Tools for Text, there is nearly 75 videos in here. We talk about all different kinds of charting tools and studies. You'll really grow your ability to look at and read charts. Trader Psychology, well, I've been a coach, facilitator in personal growth and in the markets for 22 years, and I really help you look at the personal issues that really can get in the way of your profitability. IRA MO is our look at longer term strategies. Stock sectors we do on a regular basis, where we look at groups of stocks and ETFs. They're ready to pop or drop. Big picture analysis, I just did a recent one on the U.S. stock market, always looking at the major markets. Style, strategy, and plan, well, these are many different subjects on engaging in the markets and trading. And our, of course, Market Week short-term view, which we bring you every single week on Friday. Then you can take a look at the archives also and see what we said in the past, as those archives are stored there. You can have this unbelievable value right now as you look at well over 300 videos, and the first-time members get this entire video library. You can binge watch all of you want with these 3 new videos that come each week, and it includes our stock index report, which is a very comprehensive look at the indexes, where we show you our charts every single week that we look at in the S&P 500, the NASDAQ, the Russell, with several of our different studies in there also. You can have all of that, a 1-month trial, half price, only $18.50. Do all the binge watching that you want. You can cancel anytime you want, or it'll renew, and that will give you the ability to just keep watching and keep learning. You want to get our half price link, write me at slim@askSlim.com, or go to the front of the web page and click on Contact Us and let the support team know that you want to get that half price link. $18.50 for all of that learning that you can do. I mean, it is just an incredible offer. So please do support yourself in learning, and support us becoming an askSlim Level 2 member. Thanks a lot. All right, for the best of the week, we're going to show you our cycle analysis on weekly charts. This is what we call the heartbeat of the market. That's what our style of charting is, and we're going to show you these rhythms, give you greater market awareness, better feel for the market. When we go to the best of the week, we're going to look at stocks that have the biggest gains, but they're not necessarily the biggest patterns, and we're going to show you that in this big upside week, which was led by the financial stocks, that a lot of them have come to areas where they're likely to be stalling very soon. Here is a look at Goldman Sachs, which was the best for the week on a strong earnings beat. Of course, a lot of these stocks had downgraded earnings, and expectations were not great. Take a look in here and you could see these are called cycle brackets on the bottom if you're new here, and what they show you is the rhythms if the rhythm was ideal. In other words, you make a bottom, you rally, you come down and correct, make a bottom, rally, come down and correct. You can see that right in there. And there are larger patterns and smaller patterns that we identify in these market rhythms. A low was due right over here. It came a little bit late. This red area is showing you negative. That's when it broke under this key area. And as we noted here, a cycle low support violation. The green area was pretty feeble, and that was an early peak. We call that a left-hand translation, which is negative. This corrective area here that then broke down, and it fell all the way down and past the timing that we expected the ideal low to come, and then you get a rally. Now if you look carefully at this, what we said was that we had an expected rebound to occur, and then a failure that goes into mid-2019. it's getting up into that resistance zone right up over here. It actually moved up through a lower resistance zone and now getting up into this middle resistance zone, and we expect that very soon Goldman Sachs is going to be done with this rally. You just watched the opening to the askSlim Market Week show. To watch the complete show, just become an askSlim Level 1 member. It's still no cost to you. It includes my analysis on the best and worst stocks for the week and my projections for the short-term view of the coming week. There's always a chance to learn a lot about special situations, cycle analysis, all kinds of technical analysis, and of course, potential trading opportunities. We have an unbelievable offer here in that you not only get the full askSlim Market Week show, but you get the Market Week archives, which were not available to you unless you were a member before. Plus, you'll get special Level 1 videos that we put in there from our premium library, and sneak peeks to new product launches, and of course, more specials along the way. Become an askSlim.com Level 1 member, no cost to you.
I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been